Well, Yolanda, we've seen a pretty volatile week starting really last Friday, and that was after we reacted to that sharp fall on Wall Street on Thursday, and it's really been very up and down the whole week. There is a rise in volatility we're seeing at the moment and really pretty directionless.
Yes, Stephen, we had expectations that after the market had recovered about 60% of March lows in 2009, we did see that pullback. We are looking for some direction in terms of where we're going to go. We had expected, or we are expecting, that the market is going to really trade in a sideways band until we get more direction. But we are seeing the euro below 125 today, and that is the last time it was 125 was in March 09. So markets very nervous and very cautious of that as a key technical level for the euro.
Of course, we saw that pullback on Wall Street last night, the Dow down by about 1%. We had slightly disappointing jobless claims data, and of course that followed better than expected non-farm payroll numbers last Friday. Of course, looking forward to today, we do have some data coming out this afternoon. Do you think that could provide some direction to the markets to take into next week?
Stephen, it could, if those numbers come out much better than expected, if we get, possibly good positive company results. But I think the key at the moment is the euro and where it's going to be trading, where it's going to settle for the rest of the day. We're expecting the euro to come off lower, and that, however, is going to be a negative for equities. So that is probably the most important indicator for today.
Apart from those jobless claims data yesterday, we also had news that the investigation into US banks by the Attorney General is going further than just Goldman Sachs, and it could be looking at other banks. Do you think that's also weighing on financial stocks? Because we do see financial stocks around the globe weaker today.
Yes, Stephen, we see the S&P falling very hard today, and we're seeing our local banks coming off. So that's definitely playing on the market as well. With the euro debt story, just a bad combination of the two that's pulling us lower.
And of course, Asian markets also down this morning. And of course, we had results out from Sony, and we also have those political issues in Thailand, and they appear to be weighing on markets on that side of the world.
Yes, Stephen, Thailand has come out to say that they're expecting their GDP to be lower than 2%, so very negative all around, negative news globally. Your banks, your euro coming, euro lower, so really not a lot of good news to kind of stop the level of the downward trend in the markets. So hopefully this afternoon we'll see some positive, and if we do see some those Michigan positive numbers come out, we might see a bit of recovery, but we'll have to see.
Of course, here at home, we've got the CCMA today speaking to Transnet and the unions who represent workers at Transnet, hopefully to come to some sort of conclusion to the strike that started earlier this week. In the meantime, we've had a number of companies coming out declaring force majeure, and practically they're being strapped by the strike that they cannot get coal on the road, they can't get metals on the road, and they can't get anything onto ships at the ports. So this is becoming quite serious for some of our mining companies, isn't it?
Yes, Evan, I think I think they need to resolve the situation soon, because what message is it sending to our international investors? Those wage agreements are 3 times inflation, and there really needs to be some kind of resolution. I think it should be sorted out in the short term, but only if it does extend to a week or two do we see material effects in terms of earnings for your Kumbas, your Marafis. So very important for companies to step up and say, we're not going to accept this.
Yolanda, you talked about the euro trading at 125 against the dollar, the low since March last year. And of course, that's seen gold hitting a new record euro high today. Of course, we had that record dollar high on Wednesday of $1,248 an ounce, and that's propping up some of our gold shares.
Yes, Stephen, we're seeing our gold stocks performing really well. We did, however, see Harmony coming off a little bit low, but we think that's possibly on a little bit of profit taking because a weaker rand is very good for Harmony, and we've seen a bit of rand weakness there. I think what's really important about the year is that we could see it move to 123.45 in the short to medium term, and if we do break through that level, we could go down to 117. So we need to keep our eye out there.
Of course, the implications of that for the rand aren't very good, but again, the weaker rand does help our gold miners, doesn't it?
Yes, we're seeing a lot of investors moving away from emerging markets and into gold. The only problem is that gold, we have a limited amount of gold, and therefore we're seeing investors moving back into the dollar. So negative for emerging markets and positive for our gold price. So hopefully our miners will get the benefit of that in the longer term.
Yolanda, we have to leave it there. Thanks very much for your time this afternoon.